that means we are now live here on our YouTube channel. It's Tackle Trading's Halftime Report, our daily show where we go through the markets one step at a time, top-down analysis style, looking at the news, economic data, charts, pretty much anything grabbing our attention that we think is important, relevant, break it all down, analyze and give you guys some insight so you can better run your daily routine. Welcome out traders, hashtag Team Tackle right in the chat as you're coming in and joining it. Let's keep it positive. Let's keep it light. Let's have some fun here today. Marcus had a really good week. Let's end the week on a really, really good note and have a great show here. And on that note, we got a whole panel of coaches here today. Got Coach Cody running the screens, running the charts. I got Matt, I've got Frank, and I've got Mark doing analysis. But as always on Fridays, I'm going to bring Frank in first. Frank, how you doing today, sir?
Doing well. You know how much I like hanging out on Fridays with the team. So one of the highlights, if not the highlight of my week. So always great being here. Fun week in the market, right? Definitely we can take more weeks like this.
Yeah, it's been a great week in the market, obviously, for the bulls, rebounding from last week. On Friday, we had that one-day reprieve. Then we carried through most of the week. We are stalling here just a little bit today, but hesitation Fridays, not necessarily a bad thing there. Matt, how are you doing today, sir?
You know, Timmy, I'm doing really, really good. I'm excited to be here with the crew. You mentioned the panel of coaches here, right? We got Cody, Mark, you, Frank, myself. Our Fridays are really simple to understand. We spend all day together, and it just in the pandemic, it's now starting earlier and it's going later, and we just figured out different things to do. And so this is basically us just hanging out on a Friday afternoon or Friday morning. But yeah, this is what we do all day. We talk about the markets literally all day on Fridays. It's fantastic.
It's good stuff. For sure.
There are worse ways you could spend your time than hanging out, talking markets last day of the week, getting ready. I love it. I love every bit about it. It's my favorite thing.
Are you kidding me? Well. Yeah. In the morning, I start off 30 minutes sitting down, analyzing the market with you, kind of going high level, just looking at the major news. We get into the halftime report. You know, we're talking about in the pre-production show, we're talking technical analysis and trading with Frankie. After that, we're talking sectors and sector rotation and major market themes. And then we're going to scan the entire marketplace, find the best technical setups on a hesitation Friday. Oh, who could be upset after this week and today, hesitation day on Friday? Oh, this is beautiful.
It's a good Friday.
It's a great Friday. I'm loving it. Mark,
I'm in a good mood. If you don't know, I'm in a good mood. It's fantastic.
Mark, why don't you come in and bring that positivity that you always bring as well? You in a great mood?
Wait,
fishy's
running
up.
On there.
Fishy's?
The fishy's up. Like, you know, fishy's up. I'm having a good time. So
what is that stock?
It doesn't matter. It represents the entire underbelly.
It is symbolic. It's AQB. It's my favorite stock. They're up. Fishy's up. Life's good.
Life is good. All right, guys, let's break the markets down one step at a time.
And listen, oil stocks are up and Bitcoin miners up. Listen, that's the trifecta of happiness for me right now. So
everybody's in a good mood. It's been a great week for the markets. You can find a lot to hang your hat on here this week. Let's start with technical analysis here. We'll get to the news here in just a minute. And
wait
Cody,
a second, hold on. Mark just went from Bitcoin miners, fishy, and what?
Oil.
And oil. So oil, fishy, and Bitcoin is up. This is a weird year. It's just a weird year.
It is. Yes. I don't think you can deny that.
He's deep value guy.
There's some deep value in some salmon fishies.
Yeah, that's so 2020, Mark. You know?
Yeah.
Enough of the fishies. It's not fish Friday. Is it Fish Friday now?
It's not Fish Friday. No.
Oh, there you go.
Tim. So some things do not need to be said out loud.
Fair enough. All right, let's start with technical analysis on the markets. And Frankie, let's get your read on this here. Obviously, we've been talking about this thing as it's been developing day by day through the week. S&P 500 hit the all-time high yesterday on the index. And here we are dojing today on the broad markets. What are you seeing in this chart?
I mean, this is the perfect chart that means let it cook, right, Maddie? Whenever we say let it cook, we've had great price appreciation into resistance. We always like to see a little bit of hesitation. The way I think about it is I want to give all of these folks who, bought into the chart, in this case, that's S&P here, an opportunity to take their profits at resistance and then get some follow through when we break through. So in my head, I'm always thinking this is a great place to take some profit. So that's why I really want to see it hesitate. I want to see what happens, how the actual traders react to that. So this is exactly what I like to see on a Friday, coming into a resistance level off of good price movement. Let it cook over the weekend into next week. Should open up the door for some really interesting trade setups.
You know, Matt, when you have a little V-shaped rally up into resistance like this, then a doji, obviously, I think most traders are going to prefer the doji heading into the weekend, like Frank's talking about. What are you seeing here in the price action?
Well, I mean, honestly, what you just heard from Frank is why Frank and I can never be on Trade Masters together.
Yep.
Because we don't exactly have different reads on it from a technical perspective very often. And when we do, it's like, what is second? What time frame are you looking? Okay, we're back. We're back. We're good. We're good, bro. But no, he's absolutely right. I mean, you've had a very fairly volatile last 2.5, 3 weeks in the marketplace. You had a wicked up, down, up, down, up, down, up, down, where you violated some fairly important support levels in the short term. And it's been very impressive to see the rally this week in the market that really kind of started last week on Friday when we did see that double bottom in the market. And yeah, even though we're hanging out all day having fun with the coaches of tackle trading, you know, we're looking at that market on a daily basis on Friday, saw that double bottom, kept our rankings where we did. We did not downgrade the market, you know, in the face of that fairly nasty violation of the 50-day moving average. And a lot of that was based on the technical analysis. And then you had really good follow through this week. And you know, when you're seeing the NASDAQ up this week like it is, and the S&P and the Russell, I mean, the entire broad market was up this week fairly aggressively, and you're all kind of kissing into those resistance levels on the S&P. You're a little bit overextended in the short term, and so a little bit of a hesitation coming into the weekend. I mean, guys, if the market's up 2% today, I promise you, you're celebrating your profit in your portfolio, but you're hating the trading week next week. And so giving it a little bit of a hesitation, you know, coming into the weekend right underneath that breakout channel, I think it's a positive thing, quite frankly. A little bit of a hesitation after a very positive price performance in the broad market this week.
Yeah, no, and obviously that hesitation, I think you guys are dead on here. And I just want to reiterate, we prefer this so that we can get setups coming into next week a little bit easier and cleaner for triggers and entries and all that kind of stuff.
Yeah, I know it's weird that for the new traders who just want it to go to the moon every day, that but we actually do like dojis, guys. And sometimes crazy, I know it's crazy, but sometimes we like stocks to go down in price.
Yeah, I know.
Yeah.
Well, careful.
Nope, I'm saying it.
All right.
No, I'm saying it because I like bullish retracements. They're fantastic.
I do love that pattern as well.
Yeah.
Mark, what are your thoughts on market conditions this week? Any broad thoughts, analysis?
The headlines. Well, I mean, the headlines this morning were 10-year yield at 1.63, right, and they have a gap down to start the day. There wasn't any fear, though. I mean, one of the things I use to gauge fear, you know, I have like a wide selection of stock screener, kind of like a heat map, right? And, you know, you immediately started having buying in preferred areas, like immediately. You know, the underbelly was mixed. Tech was down, obviously, on those algo-driven rates higher headlines, and that algorithmic trading is probably going to go on for a while until the market gets focused on something else. But there was immediate buying in a lot of preferred areas, which immediately showed to me there was no fear. That there was no fear in this market today. You know, can fear pop up at some point in the future? Sure, you know, but that's always a constant. But for a day, especially in areas outside of tech and those rate sensitive algorithmic trading thing, people were buying it up. And so this hesitation, even if you have a hesitation next week to start the week, those preferred areas, those rotation areas, they're very, very, very healthy. And boy, they could use a little cooling off anyways to provide the next round of great setups in oil, the next round of great setups in the industrials, next round of great setups in a lot of those areas where money's flowing into.
You know, Mark, I read those same headlines you did today. You know, market down on, you know, growth fears, right? Right. That was the headline, right? It's almost like they took that headline from other headlines they've written in the last 3 weeks, correct? Correct?
Yeah.
Right. Okay. Let's check the internet. Let's check the tape. Let's see how accurate those readings are. Okay. Now, Tim, I've been saying this inflationary storyline, this bond market's been a little bit of a nothing burger, right?
Yeah.
Media is reporting today that it's stoking the fear again a little bit, right? Market down on growth fears, right? Okay. PPI report came out at 6:30, 8:30 Eastern, right? So find me 8:30 Eastern on that chart, Cody. It's hard to find. I know.
Yeah,
nope, that's not it. Nope, that's not it.
6:30 my time.
You would think that was it, given the fact that the market sold there. You would think that's what the headlines were talking about. But that was the Asian markets last night. Find me 6:30 Mountain, 8:30 Eastern. I know it's a tough tick. It's tough. It's hard to see.
Right there, I believe, with the time.
I know
difference.
it's a tough tick. It's a small doji on a 30-minute chart. That was the PPI report this morning. Now, the PPI report did report a higher impact on inflation. There's no doubt about that. No doubt about that. It obviously runs in line with that storyline of growth concerns specifically related to the NASDAQ and being able to finance growth in the future. You did come in at 0.5% versus 0.4. That represented a 2.7% increase in inflation, which is well above. That is on the backs of a PPI report that showed a significant increase in January as well. And what do we know about the PPI report? It has a tendency to bleed into the CPI report, the consumer price index. So the PPI report did stoke some of that additional concern. My thing is, when Mark's talking about all these headlines, that's not when the market was actually going down. The market took that PPI report like it was nothing, like it didn't even happen today. The market actually sold on the overnight action in Europe is when it sold. Had nothing to do with the growth concerns or PPI report today. And so this is the things that a lot of times when all you do is read headline news and think that's what the market is actually doing, has nothing to do with one another. Literally nothing to do. And it's these types of things why I've been saying for the last 3 weeks that this storyline in the bond market is simply a correction to pre-pandemic levels and not something that is real happening in the short term.
Yeah, and obviously, you know, those headlines they do just regurgitate them day over day over day over day. I bet they could have rewritten the same article 5 times.
Again, what actually transpired was a doji on the news.
Yeah, and we're looking at this here. It's a pretty interesting volume pattern right there. The cash open. Here we are. We're just kind of hesitating. Looks like a potential breakout here in the intraday.
All that's showing you is that the traders on Wall Street went to the Hamptons early in the Friday. It's Friday. It's Hesitation Friday, guys. Like, we're the only ones that like Hesitation Friday.
It's the day's over at noon Friday for a lot of people.
No, that PPI report came out. The market did nothing, and everybody went fishing.
They took it off. I like it. All right. Back on the daily chart here, Cody, real quick, if you can. And I do want to flash you indexes and talk a little bit about that NASDAQ.
Just one quick thing, right? I mean, next week we got a big event, right? The Fed meeting on Wednesday. You know, with all of the things on, you know, that have caused so much trouble lately. I mean, that's a big event. I mean, would you be surprised at all if this hesitates heading into the Fed meeting next week?
A 3-day hesitation in front of a breakout, please.
Like, that would be. Can I hope for it? Yeah,
please.
Guys.
And then just when the Fed's going to be like, hey, we dream of Operation Twist last night, market. We just dream about it, which means we have not officially thought about it, but because we're in the pre-thinking process, market, you can start thinking about Operation Twist. Like 3 hesitation coming into a Fed that goes dovish after the government gets done with fiscal. Oh man, it's almost like this storyline's already been written.
It's amazing to think about. Yeah. So to answer the question, yeah, Mark, I think that it could hesitate going into that, but we still got 3 obviously days in front of there. But FOMC next Wednesday, I believe.
Yep.
can't use any much more, creative language than the ECB did yesterday with what Christine Lagarde said. So let's see who can up each other in terms of disinformation. I'll be curious about that next week, Maddie. Let's look at the indexes here real quick. Cody, if you can, the S&P we're looking at real quick on the Dow, just flash through, and then the Russell, and then finish on the NASDAQ. Dow hit an all-time high as well. It's the strongest out of the four recently. We've seen that. A lot of that is on the backs of energy within the Dow, financials within the Dow, the Goldman Sachs, those types, the Chevrons, those types. But then take a peek at the Russell as well. We've seen the movement into small caps, also sensitive to the cyclical areas of the market, those rotation themes that have been in place for 4 months. But I think we got to spend some time on the NASDAQ here, because this is the one chart, obviously, that has a very, very different read just from a price action perspective. Frank, what are you seeing in the NQ contract?
Well, in the short term, it's definitely the weakest of the bunch, right? That's pretty easy. That's a pretty easy call to make. It's looking an awful lot like a bearish retracement, right? Working into those moving averages, lower highs, lower lows, didn't fire back. We did have a nice upward movement this week. So, you got to give it credit where it's due there. But as of right now, unlike the other indexes, it's not breaking resistance except for intraday resistance, right? And so this is going to need, at least for me, a little more work. Now, this is what you like to see. I love this chart because if you are bearish, you get the bearish retracement, right? We now have an idea of where resistance is forming, where we would kind of draw the line in the sand, above high from yesterday, all of those moving averages. And on the other end, if you're not bearish, but you're respecting the chart, you're saying, hey, look, let those bears have their shot. And if it works out for them, great, happy to have that work out for them. But if we're able to establish a higher low and then take out that resistance that they're starting to bet on, right? That's my signal that I can start working back into the NASDAQ type of areas. So this I love this chart because I'm not bearish, right or wrong, better or worse. Like many traders, I'm not a bear right now, but I still respect the chart. I need to see that downward movement. If I see a higher low be created and we take out resistance, that's going to be a great technical signal, in my opinion.
Matt, anyone
can
add to that?
Yeah, I do want to add to that, because Frank's got, as is always the case, he's pretty spot on his technicals there. There's just too many charts that look more like this. Like, for example, take a look at, AMD, right? Very, very popular trading company name out there. There's too many charts that look like this, right? Reversal type patterns, bear retracements, fighting against resistance. For it, throw a dart, and I'm just in the A's in technology. I'll just go through the A's: AVGO, APH, AMAT, ADI, ADSK, AKMA. Like those are just bearish retracements, guys. That's all they are.
A lot of the underbelly charts look like that too.
And it's not technically technology, but Amazon's doing the same thing, right? Bear retracement coming into the 200-day moving average, and so you're looking at these charts, and they're not pretty. They're just not. They're not. But then you go look at finance, and you go look at energy, and you go look at basic materials, and you go look at the cyclical movements in the market, and you go look at the small and the mid caps, and you go look at the Dow components, and you're seeing high bases in strength. You're seeing nothing to get concerned about. And so, I do think there is still some concern. And like we talked about yesterday and the day before, the storyline that's been going on with growth in the NASDAQ isn't over. I do think the inflationary and bond market is not the real reason, though. I think this is an area of the market that has had so much price appreciation that there is truly some valuation concerns in this area of the market that the market does not share in finance, energy, industrials, basic materials, and other areas of the market. I think this is I honestly believe that this is the storyline that started during the election and has continued to play out, that the economy is going to reopen, inflation is going to uptick during the economy reopening up, and a lot of the money that's been made in the market over the last year has been on pandemic related plays, stay at home plays, technology type plays. And it's those areas of the market right now that are specifically of concern, is those discretionary and those technology plays that did really, really, really well last year. And quite frankly, got very overvalued. And so I think there's a little bit of a valuation concern going on in this area of the market. That's what's really transpiring, in my opinion. And yet, and we report it as a growth-based concern when it's really, because the growth makes sense to us from, oh, inflation and interest goes up. We get that, but I truly believe this is more of a value rotation than anything else.
Mm-hmm. You know, and those themes that have been in place for months, you know, obviously are still going to be aided by what happened yesterday with the vaccine rollout.
My God, I've said it before. I'll say it again. I'll say it again 6 months from now. Guys, value got destroyed over the last 10 years. Let's not freak out over a month simply because value's beating growth for a month in the last 134 months.
Mm-hmm. Yeah.
Perspective, guys.
Perspective, exactly. And by the way, on our sector rankings over the weekend, I'm sure that we're going to have long conversations about each one of these components in the markets. And we do have those cyclical areas as our strongest rated sectors. It's been a long time since I saw energy and financials on the very far right of the football field. So
and
consistently for a while.
Let's talk specifically about tech. I mean, last week we had tech ranked at the 40 handle. It's you know, it goes outside the specific bullish ranking. I know the price went up this week, but I'm not going to make an argument to upgrade technology.
I'd agree with that.
I don't think technology gets put into the bull area yet. I think what Frank said from his technical read, let me see a higher low and then a breakout. That's the type of technical read you upgrade and front run in front of.
Mm-hmm.
I don't think you front run a standard bearish retracement. Like,
I'd agree with that.
I think that's insanity.
Mm-hmm.
Mm-hmm. Mm-hmm. Yeah, I agree. And that development in that chart that Frank and you are talking about, that does take some time, which is why you don't have to be impatient. Be patient.
And
Let
the
your
reason
setups
the
happen.
40 ranking, even though it's slightly bearish on the short term, is again, when we're ranking things, we don't just take into account short-term price action, but we take into account multiple time frame analysis.
Mm-hmm. Mm-hmm.
Yep.
Let's flash through the commodity market next here as we're working through our process. Let's go to crude oil. And Mark, let's bring you in on the commodity markets here. Later in the day, Mark will be doing his At the Bell show, 3:00 Eastern time, where you go through all the markets, commodities specifically, and have a discussion with the pro members.
Hey,
but
let me give you a little sneak peek. Oil's in an uptrend there. So,
okay.
I mean, listen, it's as strong as it gets. We've been talking about oil for a month plus heavily. It's performed. It has everything. It has OPEC. It has sentiment. It has technicals right now. You just want patterns, and the XLE and the energy charts are looking pretty sweet too, right?
Mm-hmm.
I think in runs as this get, because there's still room to go, especially in energy stocks. You know, we've been saying this. Oil can stall out here, and energy stocks can still run. So, you know, hey, higher oil prices, if it breaks out of this little resistance area next week or the week after, that will be another little boost to energy stocks. But even if oil stalls here, energy stocks can still run, and I think that's important. I think that's important to believe in there. I mean, does anyone disagree with that?
Not at all.
Not me. No.
Yes. So I mean, there's room to run the sentiments there. I mean, it's just, I mean, we've talked about it a lot. It's a good sector to have some exposure to.
Mm-hmm, mm-hmm. And the thesis around energy, you know, obviously for me, and I think many people, well, I don't want to speak for anybody else, but I think so. It doesn't have to have oil at 85, 90 or $100 a barrel. It could even stall in here at this high 60s, mid 60s, and energy stocks still have a long way to play catch up on profitability.
I mean, and if oil happens to go into the 70s or the 80s, bad for your gas, good for energy stocks. It serves as an additional catalyst. But it's not necessary. And that's a pretty good spot to be in as somebody trading commodity stocks, is that you don't need the underlying commodity to skyrocket for your play to work out. It doesn't happen all the time. But I think energy stocks are in that situation right now.
Mm-hmm. Yep, I agree. Let's look at gold next here. GC contract, and Frankie, obviously it's been an ugly chart for a while. It's trying to test some support down here this week, but it's not exactly completely strong or held yet. In fact, we're still in a bearish retracement. What do you see in the chart?
Yeah, I mean, it's I mean, what else do you say? I mean, it's a bearish retracement. We've got a ton of momentum to the downside. Again, unlike, say, the technology sector as a whole, the NASDAQ, where, I'm kind of visualizing how maybe that happens next week. I still need to see that higher low develop. I still need to break some resistance before I can even start to get interested, right? But because of the extended movement to the downside, I think it's going to take more than just taking out yesterday's high to get me excited about gold. I mean, it's
Well,
not in a good spot, right?
Yeah, not only is it not in a good spot short term, it's not in a good spot from a trending perspective either. The velocity on the sell-off has actually picked up in both the intermediate and the short-term trends. Gold has fallen out of favor in the marketplace and needs some time to settle down, not just technically.
Right. It doesn't seem like everybody's super excited to buy this dip,
nobody,
right?
Nobody wants to talk about gold right now.
Mhm.
I mean, we haven't talked about gold in really months.
Yeah.
Since the violation really of the 200-day moving average.
It's gonna
But
take some
ever
time.
since that, like I remember Tyler about a month ago, gold was bearish retracing coming into the 200-day moving average, and he says, you know what, it's what you want to see, right? If you're a bull, I mean, you want to see price going up. And I said, it's really not, because it was going to get smacked, and it did. And the velocity's been picking up, and it's going to be an amazing buy about the exact same time Walmart's an amazing buy.
Mm-hmm. Gonna have to take some time for that to develop, though, obviously, like you guys are talking about. All right, let's take a peek at the dollar, then Bitcoin. Some interesting news around Bitcoin actually in the last 24 hours. Talk about it. Wisdom Tree, applied for an ETF for Bitcoin, one of recent applications from a couple other companies as well. Looks like we're moving in that direction. But UUP, I got nothing.
I wonder what
here.
the Winklevoss twins said about that.
Did you pull up the Bitcoin chart?
The dollar here, I got nothing on. Anybody got anything they want to add to the dollar?
I
got
want to know,
zero.
like, I've been I actually
I do, but Mark's already on Bitcoin.
Oh, did you? I wanted to know Frank. I mean, Frank and Matt. I knew Frank was going to be here. Matt, two technicians that I trust. Because I have increasing exposure to Bitcoin, I wanted to hear their technical take on Bitcoin. Literally, I was going to tune into the halftime show today, even if I wasn't going to be on it for the Bitcoin segment.
Frankie, you first.
Yeah, I'll go first. You have my blessing, Mark. Listen, we got into resistance yesterday, right? A little bit of hesitation there, but I mean, look at the way we fired back off of today's low, right? And so at this point in time, I mean, let's call it what it is. You don't have to be particularly smart to say buy Bitcoin breakouts. It's been pretty profitable as of late. I'm not going to bet against that holding court, because that's just been the way it's been working. So yeah, I mean, this breakout, can you fight a little bit? Hey, let's hesitate, let's and then go, sure. But I mean, this break of resistance and the way we fired back, I think that's a very positive sign. I'd be perfectly happy if I was in this chart right now.
I do agree with Frankie on that, on the daily perspective, but I do think that the intraday, if you're talking about a new trigger, I think the intraday needs some time to establish, quite frankly. The only consistency I can see over the last 2 days is actually the downward movements in price, and then Bitcoin just fired back, as Bitcoin does. But again, the only consistency I can see on that chart, if Cody will go to an intraday chart, is the actual downward movements in price. And you'll notice over the last 48 hours, you've had two fairly consistent bearish downtrends. Both got fired back up off the lows. And so yeah, I don't think it's a great day trading technical setup. And I do think Bitcoin is a great day trading vehicle, and it's a great park your money and investing vehicle right now. And so for it to be a swing trade, I think it needs time in the cooker. And for it to be a better day trade over the last 24, 48 hours, I think it needs more consistency on the upward movements in price, because you're not looking to short Bitcoin ever,
right.
ever.
No
And so nobody's doing that. And so, yeah, I mean, Bitcoin fired back off the lows, but both times gave you 30 minutes. And if you weren't around, you didn't find it. So I think it needs some time. I think it's healthy this week. I think it's going to give confidence to Bitcoin bulls. I think it's going to give confidence to the investors. Has some really positive news storylines this week for Bitcoin as well on corporate adoptability. But the intraday analysis, again, when the only thing I'm seeing consistent is the bearish downward movements in price, and then just fire back type bullish mechanics, I think that's a very difficult day trading environment.
Mm-hmm. And just on that news real quick, you mentioned the Winklevoss twins. They actually did apply for a Bitcoin ETF back in 2017. It was rejected by the SEC.
All right, listen, they've been trying to since 2013, Tim. Like that was just the
The
latest
latest version, right?
2017.
Iteration of it.
Yeah.
It
There
feels
is
different
no
this time.
there is no rational reason why there is not a Bitcoin ETF in the marketplace. Not with the utter garbage and trash the SEC has approved from ETFs. It is disgusting behavior that they do not have a Bitcoin related ETF right now, an official one. It's ridiculous.
I think they'll capitulate.
I think it's absolutely sad that I'm not going to say sad. I'm going to say I think it's kind of grotesque that they allow Grayscale Bitcoin Trust and allow them to go spend $100 million on CNBC marketing to buy their shares, but we can't have an actual ETF that actually has investment in the actual raw asset class.
That tracks the raw price.
That's ridiculous.
Yeah, I agree. 100%.
Who's getting paid on that one, Tim?
Well, you want to know?
Somebody at the SEC, I know that.
CNBC, I think, is getting
CNBC made $100 million on that one.
They make a lot of money. Bitcoin,
that commercial is on all the time.
I'm not kidding, Mark. It's why Grayscale went up so much. It's marketing shares.
Is all the time it's on.
Yep. All right, that's it from the top.
Can't wait to see that bonus check that CEO is going to get.
Somebody's going to get paid.
Somebody's getting paid.
By the way, speaking of getting paid, some people with these NFTs are getting paid these days.
Man, I'm not ready for that.
I'm not ready for it either. But $69 million for what I just saw across the headlines today. So
the first 5,000 days, I want them back.
What the heck is an NFT?
We're not ready for that. Nope.
We're too old.
Mentally, I'm not ready.
It's Hesitation Friday. I'm too old to learn something.
Millennial Mark feels like he needs to know.
Go to a museum just to feel like a human being.
I heard the NFT went higher than most Picassos have ever went.
You shouldn't. Like, we should move on.
Yeah.
An NFT is a version of digital art that is sold on the blockchain, typically used in Ethereum. And so what you have is basically digital art, memes, art, pictures, you name it. But it's art, and people are paying it. And now the first 5,000 days sold for $69 million. What's his name? Beeple? Something like
Beeple.
Like third highest grossing, artist of right now.
Is Janet Yellen going to come out and talk about the dangers of investing in NFTs?
The only thing that should be said is we have an excess of money in our world right now.
Yeah, that's right.
When
the person who paid that 69
goes for $69 million, guys.
Well, and it's rumored that it's a crypto investor who made a lot of money in Bitcoin that bought that, by the way. So it's interesting the way that things all just kind of tie together. But I'm not ready for a deep dive on this. Frankly,
I'm not ready for a deep dive on NFTs.
I'm not ready for it.
No, I'm not there yet.
Moving on to stock talk. There's not a lot of corporate items out there. There's a couple of important earnings reports I saw. DocuSign, Ulta. I do want to talk about those. Matt, you want to talk those two earnings real quick?
Nope.
Yeah.
Not interested in either one of them.
Yeah, then let's give a couple other news items I did find interesting. AT&T, take a look at T here. HBO Max, the streaming wars, the streaming service competition. We saw data out of Disney earlier in the week that was incredible about their Disney Plus platform. AT&T is actually projecting some pretty good growth on their HBO Max platforms as well. They expect global total subscribers between 120 to 150 million by 2025, and I believe they will beat that and crush that in the future. These subscription platforms have just been really, really strong. Anybody got interest in AT&T at all? Down here, dividend payer, neutral.
From a HBO Max growth perspective?
Either way, any
no,
interest at all?
Disney. But listen, I don't care what AT&T does. AT&T's tried growth. They need to realize they're just value and just capture that dividend, baby.
Mm-hmm.
Yeah,
that's how I say it.
Yeah, from a trading point of view, yeah, not so much. But from a longer term perspective, I mean, sure, absolutely.
Mm-hmm. Mm-hmm. Next one, another streaming service, Netflix.
Tim, I'm going to say something radical on AT&T. I think the HBO News really gives it a great argument for net neutrality for the next 10 years.
For net neutrality over the next 10 years.
Yeah.
I'm going to have to noodle through that one. I'm just
Yeah,
thinking about
think
their
about it.
7% dividend. So,
You'll get there.
all right.
You'll get there.
All right. All right. Let's talk about Netflix next if we can. And this one, I know for my family, might impact a couple of my brother-in-laws and whatnot. Netflix is testing new feature to limit their password sharing so that you can't just log in to somebody else's account from other places. I don't know if I like this move or not, by the way. Netflix had plenty of great growth and passwords being shared for a long, long time, but they're trying to hold those account holders accountable and maybe restrict a little bit of it. Netflix here, guys. Any interest in Netflix?
It tells me Netflix is more concerned about the competition than they should be.
I know.
That's what
Yeah.
it tells me. And I don't like it from a Netflix. I don't care about the password. I'm sure somebody has. I'm sure there's 19 families somewhere in Emory County, Utah that has my password somewhere. But
Imagine.
yeah, that's just how it works. But that's one of the reasons why Netflix is the king. Is because they don't micromanage that stuff, and people don't ever concern themselves with paying that bill. I don't like it. I don't like what it, and again, from a corporate level, that means they're telling me they're concerned about the competition. That's what it tells me from a corporate level. From a consumer perspective, I could care less what Netflix does.
Well, how many times can they just continue to raise their price by $2 every year before
as
someone
much as
says,
they want?
I don't know. It did start at $6 back when I had Netflix, and
You still
well,
pay for it?
I still have Netflix. So what is it, like $19 now?
So again, you started at 6, you're still paying 19. So once again, my statement rings true.
I almost
They can do
canceled
it
when
as
they
much.
did raise it this past time. I almost did. I'll be honest.
So
Cody,
you'll
And yet-
complain, but you won't.
complain, but you won't. Like you say that, but you
No,
won't.
I was
That is the
nixed
favorite
by
thing of people to say is I'm going to cancel, but yet we see in the data that you never do.
Matt. I was nixed by the board of directors of my household.
Okay. Cody,
Yeah.
you might sound like one of the oldest young people I've ever known in my life. I like it. You be you, my friend. You keep nickel and that. Back in my day when I first got a Netflix account, I was paying $6. All
Remember
right.
when it used to cost a nickel, huh, Cody?
I love
Back
it.
when they used to send us movies in the mail.
But you are
right.
still paying that night
Just
too.
wait till these streamers get live sports programming, and then you say that.
That's right. That's right. All right. That's all I've got from a corporate news perspective here,
Yep.
guys. Kind of a light hesitation day. We love days like this. But Frank, I do believe you have a couple of charts that you were interested in, and it's something that our halftime crew out there, Team Tackle, they always look forward to this segment each and every week. Frankie, what you got, my friend?
For sure. Yeah, I always have something. I always like, who doesn't like to look at charts with folks? Really quick, I want to take a look at CNQ that Terrence brings up in the chat. This is an interesting one. It sounds like, Terrence, you probably share the general bullish sentiment on oil that most traders are doing right now. These guys are tough because they're very extended. They're working, if you go into a weekly, Cody, it might reflect it a little bit more. So my argument against them is we're very extended going into that resistance. My argument for them is that's a pretty good level of resistance, and breaking through that is a pretty good signal. So I think it's, what side do you fit on when you see a chart like this, right? Do you want to let it cook? Energy, listen, anybody trying to get in energy stocks right now, as long as it fits within their rules and money management and all of that, I'm all on board on that side of things. That's the one thing that I don't like on this chart. I'd love it if it gave us one more week, Terrence. I don't necessarily think it will. And if you made me trade this, I would definitely go bull versus bear right now personally. Oh, yeah. But that would be my biggest concern, would be the overextended nature at this pretty significant level of resistance, and how do we interpret that?
Can I ask you a question regarding these energy plays here this week? Because I'm certain we're going to be talking about a little bit of the exploration area of the market today in the scanner report meeting. I'm seeing there's two patterns I'm seeing in a lot of these stocks, Frankie. I'm seeing that little high base that we're seeing a little bit in CNQ, where you're fighting up against resistance, or you had just broken out and you're kind of fighting to keep your head above that water, right? CNQ is a really good example. Conoco, right? COP, another example there. CPG, Crescent, another good example there. EOG, another example there, right?
Yep.
So you're seeing that a lot, and that's kind of what's happening in the sector. So that's not too surprising. But you're also seeing a few of these charts doing a little bit more of a traditional flag type pattern, such as Devon DVN. When you're looking at energy, and this is a question for all of you guys, when you're looking at energy specifically this week, are you more interested in the snapback flag patterns like Devon, or are you more interested in the high base breakout patterns?
It will depend. I'm open to either one of them. I think it's such a dealer's choice market, right? I mean, we have so many options within this space that I think you really lean back on to where do you feel gives you the best risk to reward? What's got the most upside? What's got the most room before we get into levels of resistance that might, scare you or make you want to do some profit taking? So I'm not going to have a preference on the pattern itself. For me, it really will come down to what's given me the best risk reward. Because I mean, this has really been the theme of energy for the last little while, right? They're almost all of them are up, right? And so we do have the luxury of choice and being a little on the picky side.
What about you, Mark?
I've played both, like Suncor when it broke out. It wasn't quite as steep of curve, but SU, when it broke out, I played it last week. I've been looking at Apache.
Oh, that was such a good trade. Once again, on our reports last week.
Yeah, Suncor, nice.
So I played that last week. I'm looking at Apache right now for a deeper pullback right now, and then confirmation. So, like, I'm playing, like, basically when I get a good technical setup, I'm going to play it. And so, when they occur, and then put some on the watch list for me to wait, like Apache. I'm like, all right, so this isn't ready today, but I could see a pullback to the 20 here, Doji go up. I'm going to be all over that. So when I get a good technical setup in either one, I'm going to take it. I'm not going
to, I personally like the Devon trade most. I think that bullish retracement is going to have the best reward to risk ratio. I haven't done all the analysis that I do coming into this kind of report, but this to me is going to have a fairly decent reward to risk ratio. You're 1-to-1 at first target. Second target has momentum behind it in trend. I think it's a pretty decent trade.
No, and I've been rotating my trades too, because I don't listen, I love energy. Gosh, I'm not going to have my whole account be energy though.
Right.
No, that's why I think it's like, which one do you like? Do you like the high base, or do you like the retracement?
And so I could see myself rotating out, taking profits on Suncor that it's run, bring him Devon on a trigger, and so I think that's the key on energy, because there's gonna be a lot of opportunity, I think, in the next 6 months. But you don't want a huge chunk of your account. You want good exposure, right? Probably more than you've had in a long time.
Right?
In years.
So you want really good exposure, but you also have to make sure that whatever that percentage is, it's going to be different. For some people, it's going to be 15. For some people, it's going to be 5. For some people, it's going to be 20. Like, that's up to you to decide what percentage you're going to allocate to energy plays, and then just make sure that you're not going over that level. So.
Yeah.
And I'm interested in both. I think reward to risk on the pullbacks are going to be good setups like this DVN, like you guys are talking about, but there's also some good momentum breakout plays. Like I was looking at LNG,
Yeah, I was looking at them as well, Tim.
So I think I like that phrase you used, Frank, dealer's choice. I think you can find good setups in this space, and probably on the reports is what I'm guessing is we'll probably have a couple of both.
Can I give you a trash fig?
Yeah,
sure.
I know it's Friday, a little bit of get Mark a little excited for the weekend. He likes to see the trash.
My pen of shack.
There you go, buddy.
These stocks always got you.
What about CPG under $5? Little Cody special, snapback 450 test. Stop loss under 450. Stop above the high of the. Entry above the high of the week. Stop under 450. What do you think?
The stop's too tight for these trash stocks. If you're gonna, it's.
Dude, that stop is perfect for the volatility of this stock.
Well, your chances of getting stopped out on these trash stocks after a big move really, really high. So.
When you look at a chart like this, though, Mark, because I don't see your trash in this chart.
So.
I don't see a random gapper. I don't see a crazy volatility scale. I don't see, an overnight action that you can't trust. the garbage and filth I don't see in this chart. That's why
Well,
I
I
say
mean, I also am against like stop losses above the 9 anyways, because I always have wider stops. I hate getting stopped out. I'd rather lose more money, so that's a
and
personal preference.
that
of me.
stop loss needs to be under $4.48.
So,
On that momentum.
Yeah,
And
that's the trade.
it's a beautiful trend with increasing momentum, of course. Yeah, it's a good looking chart.
See,
It's-
I think Mark would look at it and be like, I want it at 3.
I know
I think that's
exactly what happened here.
That's exactly what happened
We all
here.
know exactly what happened.
Yeah.
Here.
So
That's funny.
that works. So yeah, I mean, energy's been a lot of fun because it's been pretty smooth, right? We've all got our favorites, and whether it's the name of the company or the price of the company, and it's really been a fun place to trade as of late. That's for darn sure.
well, give me a technical read on this one, because this is a trash pick in oil that I've brought up twice on the Trash That Makes Cash, REI, and
Earnings.
See, hold on. This is your type of trash.
Mm-hmm.
Yeah, I mean, the problem I would have with this, Mark, is I'd have a hard time seeing how you can make risk to reward work. I will, look back at that pivot that was set back up in January. Got a few things like that. Another one is TALO. That's so I think you got to respect
sorry,
those.
Mark.
Oh,
Sorry,
no problem. Just you got to watch out for those. And if you believe that, right, at least short term, I believe that risk to reward. I mean, you got to give it some room. I'm with Mark. I'm more likely to give a little more room on my stop than a little less for better or worse. That would be the difficulty, unless you're trying to like day trade it, Mark. I'm sure you could pull that one off.
I don't day trade these things.
Well, maybe now's the day to start doing it. One more, and then we'll look at not energy. But go ahead first, Maddie.
I was just going to say, today with the whole NFT conversation we had pre-show, I now truly do understand that you can find art in anything.
You can, yeah.
Listen, I've loved this stock for a while, but it's starting to stretch towards.
But my goodness, like,
so
I'm sorry, the CPG trade, like, that is clear, consistent, simple price to understand.
And it doesn't have earnings.
Let me look at REI.
Who cares about earnings on these little oil companies?
Yes,
I do.
Jim does. Did you not notice how fast he said earnings?
Blue icon, and he gets like, no.
No, I mean, I love this stock at 2. I really liked it at 250, but it's getting past where like the cheap level of like comfort I'm at. So
all right. So now we all understand what happened on the CPG trade.
That's right. That's right. Frank, you got some more charts?
Yeah, let's look at a couple non-energy charts. Got a couple breakouts. I want to let you guys debate them in the restaurant space. Eat or cake? Eat.
Ooh,
I don't have any restaurants.
I want to eat cake, Frank.
I know. I mean, it was almost too perfect.
It
right?
was too. It was just there, bro.
I wasn't. Yeah, I wasn't gonna try.
I had to.
I have to do it. So can we have our cake and eat it too?
I just did it.
We can, Tim. It is possible. We could just go half and half.
That was terrible.
Sorry, I had to.
I subtly tried it. No.
Yeah.
I don't even know what to say to that. Okay, so what are we looking at first?
Eat or cake?
Let's look at eat first.
Cake.
Yeah, let's look at eat first. Let's eat.
I like eat above 75. I think that's clean, good. Brinker, great. I would put that in. Like, I think that breakout's pretty solid, actually.
Yeah. What? Oh, go ahead, Mark.
No, I'm just looking at it. Do we have any historic resistance?
No, I mean, what I like, what's
that.
nice about EAT is these are all-time highs. So you don't have anything looming above you that you have to wonder, is that something to get worried about? And that is not true with cake.
Ooh, cake. Yeah, cake's reopening type scenarios. Ooh, but I'd still like 60, bro.
Yeah, it's pretty. It's a it's a
daily here.
Yeah, it's a fair debate. I mean, honestly, I don't see any reason why we can't make it up to the all-time highs on cake.
Yeah,
it doesn't it concern. I mean, that's really stretched, right?
Well, yeah, you need to change the scale. Let's look at a daily chart instead of the weekly. The weekly's not going to be a great trade.
Sorry, I was over in the chat. My bad, guys.
Yeah, now you see the high base clean trigger
no,
above
that's
60
holy
that,
cow.
that correlates with the old resistance stopping point.
I look at all
pure,
the
bro.
wicks. 1, 2, 3,
That's
4,
pure.
5, 6.
That is insane. Oh yeah, algos don't trade.
Algo,
though.
algo,
Yeah,
algo,
I
algo.
know. Oh my.
We found an algo, guys.
It's hard to find a cleaner entry like ever. I mean, that holy cow. That's like that's beautiful. Actually, the precision of it.
Yeah, it's pretty nice. So it's a tough call. It's a tough call. I mean,
I take cake. I
take
like
cake
the clean
too.
trigger coincide with the $60 price point from a year ago.
Sure.
I think
Tim,
that's a
remember
quick
last year
jump to
when we were
65, bro.
selling naked puts at $20? Do you remember that?
Yes,
Tim
I
was like,
do.
"Hey, let's sell a naked put on cake at $20."
There you go. It was a good idea, Tim.
Could have
You
just bought the equity.
No, a better idea would have been to buy the shares.
Well,
but,
yes,
you
but
know.
hey, he made $27, so that's better than nothing.
You
It's
got to
far
go
better
to
than
the
nothing.
Cheesecake Factory and get 2 pieces of cheesecake.
There you go, Tim. There you
That's
go.
right.
But yeah, I mean, both of them pretty clean.
I like the cake. I'd like cake. Can I throw and I think cake's better than this, but just to throw DRI in there, it's got a pretty decent breakout too.
The energy charts are going to look like this 2 months from now?
Mark,
the energy charts
I love energy too, but not every stock in the market is an energy pick.
Yeah, bro, we talked enough about energy.
Dude, I told you at the start of the show, oil, Bitcoin, and fishies.
And we got a little bit of all of that.
We did. Yeah. We get some. Yeah, DRI is nice too.
DRI, please.
It's very clean. Listen, they're probably all realistically rolling together.
These are just so clean.
Yeah, and the other thing I like about DRI, maybe it's a little bit of a week in front of cake, but I like the cleanliness of that cake breakout. And I like a quick journey to 65 on cake. I think cake's I know you want to point it out, but I think cake is the best trade of the bunch here.
Yep, I like that cake setup a lot.
Fair enough.
They're just so clean, all of them.
Yeah, I like Eat best myself, but I mean, you are splitting hairs, and like I said, they're probably all up next week, or none of them are, right?
Well, okay, Frankie, would it be clear to say you like the cleanliness of the cake breakout, but you like the slight
targeting,
ascending triangle coming into the Eat breakout with the potential target that's bigger?
Yeah, and I also like on Eat that we've already taken out the highs.
Can we go back to Eat real quick?
Right, and so it's not that I'm overly concerned about the highs that are looming above me on cake, but I can't help but look at them and be like, you got to take profits there. You got to take profits there. Well, so I think you got a little more room to the upside on Eat at the expense of the entry.
You're
I think cake is
absolutely taking profit on cake, at least somewhat at 65. Right?
You have to, right?
But on Eat, you're like, I'll adjust stop loss if we see momentum. So I get it. I still like the cleanliness of the cake trigger, but both of them are really good fine strength.
Yeah, and so is dry. I mean, they're all really, really nice. So, nothing wrong with any of those. All right, what about, I got a few other, if we want to take a look at them. What about Levi Strauss?
I'm going to automatically know.
Their ticker on Levi?
Levi. Yep.
You know that people will be buying more jeans in the pandemic?
Post-pandemic economy reopening, it's there where you make that argument.
Exactly.
It's there where you make that argument.
Yeah, I was right about what.
Protect you.
They were. All they're going to say is they were a year in front of everybody else.
And if you don't know what we're talking about, there was an analyst that came out a year ago in the pandemic who upped Levi's price target because they're like, people are going to stay at home and buy more jeans.
Yeah, like people want to wear jeans in a pandemic.
We clowned that for 2 weeks.
We had a good laugh at that.
People weren't wearing any pants, not sweats, shorts.
Yeah, because that was early. Yeah, that was in the beginning.
That was early in the pandemic. We were all naked. Like we were trying to figure out what to do with our time. We weren't buying jeans.
Reopening is all the weight we put on while in quarantine. We got to buy new jeans.
I had to loosen that sweatband, bro.
Yeah, we all needed some needed to upsize a little bit. We go to a weekly on Levi though, Cody, because that's what caught my attention on Levi. It's Levi, right? But what I like about these guys is they have just broken through that IPO price. So we had the IPO, they had their adventures, right? We've had some laughs along the way, but now we find ourselves breaking through that resistance level, that all-time high from that IPO price. And that always catches my attention, not necessarily for a trade. It's Levi. They're not the most volatile, stock around, although they can move, right? They certainly aren't the most boring stock either. But I always am that always catches my attention, and I assume it catches other people's too, at least some. That's why I bring up Levi here today. So I don't know if this is a trade necessarily, but I like this from a watch list point of view because, well, we've got nothing but blue skies ahead of us, right?
Mm-hmm.
Yeah, that was
I'm not a
Tim
fan
gave
of
me
Levi
the,
in general. Oh, Tim gave you the, are you serious?
Oh, Tim gave you the, I hate
Right.
this.
Well, and he also it's when you get blood in your eyes is when Tim does that. It's when you want to pounce.
well, listen, I just went in
subtly.
and put in a buy order on Levi.
Market buy over
Market
the
order.
weekend. Market order. Frankie, if you're looking at Levi here breaking out all-time highs, can I give you a couple comparables that you can
Sure.
just take a quick peek at?
Absolutely. Love it.
Let's take a look at the snapback on Haynes HBI.
Oh, listen, HBI, it perfectly,
Obvious reversal pattern, longer.
Right. They had that nice pullback, right? From
Will
a
you go
couple
back
weeks
to that
ago.
weekly chart? That was pretty.
The weekly's a really good reversal, long-term head.
Oh, I like that a lot.
Like it's
Very
really
nice.
good. And guys, when you start thinking about, am I late to reversals? The confirmation on the reversal was above 1780. So the answer is no.
Clears the 200 weekly,
Right, the
stalls
answer is
for a
no.
month, then breaks out. That's a pretty position trade chart.
I agree with that. It's also a good swing trade setup, which means you have multiple time frames
Sure.
aligning, plus a longer term time frame aligning with the reversal pattern on the long term. What do you think of this flag based pattern above 20?
Well, from a couple of weeks ago, HBI was in the stock report, so I'm all for it. So
yeah,
I'll pull a Tyler and speak the book a little bit.
Yeah.
I like it, and I want you to like it too.
Yeah,
So is
I'm
this
on
the same
board.
Haynes brands that makes underwear?
Michael
so
Jordan, bro.
Yes, it is.
Underwear.
It is the same.
Why do
So people
tighties,
buying
bro?
underwear now too?
Dude, they'll buy underwear.
Yes, they're
just
buying
on
underwear
Levi's.
now. They didn't buy underwear for a year. Now they're buying underwear.
Yep.
That's the play.
Wait a second.
We're getting
we were all
civilized
sitting
again.
at home and people weren't wearing under. I get the pants, but like, wear some underwear, guys.
No, they were wearing underwear.
Bro.
They just weren't buying.
I get it.
underwear.
Okay, Frankie, a little bit more of a prolonged cup and handle, but PVH breakout of 110. Put it on a weekly, please.
That's a nice looking chart. My concern with this chart is I just see it very difficult to make risk to reward work right
know,
now.
but
200 though.
You do like that 200 weekly though.
The placement's great. Yeah, for sure.
The zone's really good.
You break out of resistance. You got momentum.
Now,
I like it.
Mark,
I'm on board.
okay, let's not front run on this. Go back to the daily, please. Okay, you got this prolonged reversal going on in PVH right now, right? Similar, a little bit similar to Haynes, a little bit in front of Haynes. I like Haynes a little bit more. But could you paint a picture, since we're in the what are they even called, the new wave
Apparel,
of art?
yeah.
Okay, let's paint a picture here. Positive earnings, breakout 110, recovery type trade.
Oh, absolutely. I mean, I like this. My biggest hesitation on this is I'm just trying to figure out how I would risk to reward it, because that is very nice placement wise.
Honestly, I don't think you do much until you look at the earnings. I think Haynes is a play here. I think the one you brought up is a play here. I also think maybe UA on a breakout.
Yeah, I'm glad you brought it up.
Under Armour.
Right,
yeah.
UA on a breakout, especially on the weekly chart. Like smooth out that volatility. But again, Under Armour retail, right? We've seen kind of the bloodbath in there recently. Under Armour doesn't really get caught up in the market volatility, pressing up against the highs, got a pretty significant resistance levels between 19 and 20. I don't know, kind of an interesting little
for sure. Yeah, absolutely.
All
of those
is
are very
obviously
interesting.
an area of the market that people are pushing with room to run. I mean, like
I love it. I absolutely love it.
This is a good area. I mean, this is why I like this show, and this is why I like the community.
And you know what? I can't wait for the Scanner Report meeting, because this is the conversations we have, and they're beautiful. It's amazing.
I didn't even think about clothing, right? I've been so focused on other things, but
energy, riot,
and
energy,
I
riot,
like
energy.
And in the market volatility the last couple of weeks, these things really didn't get caught up. I think that's a sign of strength. I think.
Is this an intervention?
Like, is what an intervention?
Are we going to break?
Are you coming back to to value?
Oh no, I'm going to do a special pairs trade with Haynes Brand and Fishies.
I love it.
There you go. I can respect.
Oh, go ahead.
No, I'm not going to top that.
No, you're not, and neither are we. So, guys, it's been an amazing week hanging out with all of you guys at Team Tackle. Tim, I'm gonna let you have the final word here today, but I just want to tell you guys how much I appreciate all the energy and the positive attitudes you guys bring to our community. You guys are the best. Have a fantastic, amazing, and safe weekend. We'll see you Monday.
Yeah, and just one last thought, one last note here, guys. All of us are going to be heading into our scouting report meetings and planning, and the conversations we just had around like retail stocks and energy stocks. Those are the fun ones where we get to build those lists from. And absolutely, and I'm looking forward to that meeting. Looking forward to putting out another weekend of great reports with the coaches at Tackle Trading. If you are not yet a pro member, simple, come and join us. It's a free trial, come and see what everybody loves. Come and see what all of our students are raving about. In the description of every one of our YouTube videos below, there's a link to our 15-day pro trial, and come and join us on the back end.
Scouting reports, team. Scouting reports, newsletter, weekend routine, and we'll see you on Monday.
Yeah, we're going to go bird dog. We're out, guys. We'll see you on Monday.
Oh, yeah. Mind of a Trader closing bell in an hour, 25 minutes for Tackle Trading. Go to the events tab.
We'll see you guys there.
Awesome. 25
Thanks,
minutes.
team.